This conference will now be recorded.
Okay. Good morning, all. We're recording. This is Larry Hamzy. If there's an issue, please report. Today is right now it's 9:01 a.m. Excuse me, and today is the 22nd of February 2021. I like to start my days by reading this. This is the fellow who was my dad's boss, first general executed some 42 years ago by the ravage regime of the mullahs. Her daughter is a friend of mine on Twitter and Facebook. He was our ace in Iran. He was head of the military, I'm saying, Akrojet. So he was the equivalent of, he used to practice some with Blue Angels and what do you call it? The Air Force Thunderbirds. She reads this every day. She posts it on Facebook, and I just thought you guys should take a look at it. I do it every day. I read it every day. Keep the faith and drop the fear. This applies so much to what we do. Don't believe in your doubts or doubt your beliefs. Yeah, this is crucial. That's how we get into trouble. Life is a mystery to solve, not a problem to resolve. Every day you should get up with excitement of what's next. Okay, of course, to do that, a lot of things have to be in place. You know, your life, your routine, your psychology, all that stuff. But work on that so you can get to this mystery. You get a chance to solve this mystery every day. This is how it happens to what we call price discovery in trading. Price discovery. So face your past without regret. Handle your present with confidence, and prepare for future without fear. Okay. With that said, let's get on to our program here. Thank you. All right. I really don't have any housekeeping orders to go through. I have a little notes here that I take a look at. I usually do that. None. I am working on something. It's not finished yet. So I'm sorry. It's just that this business is not about timetable. This business is about getting your confidence up that what you've done is correct. In financial engineering, we have a bad habit of introducing products a little bit too early, and we get into trouble. But at least it's software. We can at least update it. So moving forward, let's talk about Econ Calendar. What's in front of us? Remember, this is the fourth week of the month. Therefore, we have a lot of data, macro data available. Let me cut this back. There we go. There we go. And where's that coffee? There we go. So Mondays are usually light, but we have LEI coming up at on the. Oh, this is bad. Okay, 24th. Okay, hold on. LEI coming up here. The economic indicators. I like to look at it, even though it's a black. Excuse me, black. It's got black status, and of course, Dallas Fed would be good. Anybody speaking? No. You got some auctions. Jerome Powell's tomorrow. What venue? Is this the Senate? Okay, I think this is the Humphrey Hawkins testimony because it's 2 days back to back and about the same time. That's the end of February. I think it's Humphrey Hawkins. Yes, Case Shiller, understand that. Consumer confidence. Yes, baby. Consumer confidence. Consumer confidence. Well, that's not on this list yet, so let's add that too. Consumer confidence. Okay. And that's 89 consensus, 89.5. Okay. This is 25th, 225th. Okay. Well, yeah, I keep a little notes on my page that I print that puts together what to look for. That are essential a couple of days forward. I do that at nighttime. All right, so we got that. What else do we have? Nothing. Okay. Powell speaks the same. So this is probably that is. Next you have EAI. EIA. Durable goods, yes, baby, and then GDP. So Thursday is going to be very, very interesting. No question about it. Consensus of 1.1. Holy macro. Wow. Okay, X transformation 0.6. Okay, got it. GDP. Now, there's a talk that GDP could tick up because of a recapture. You know what? The orders, the activities have been set aside for the but this is like next quarter. We could be there's a talk of even 7%. I don't know if U.S. can do 7%, but mathematically it's possible because the base is lower. Okay, but remember we had 30% one time too because we had dropped 35% the quarter before, so it was trying to come back. Unfortunately, that's not the case with employment. That's a different problem. Yeah, don't confuse the two, Seller. Right. All right, there was consensus a little bit lower this time on initial jobless claims, and it's 8:15 now. We shall see. Yeah. Bostic speaks, and he's from Atlanta. Okay. Then pending home sales. All right, so that's Thursday. Anything else I need to know? Okay. John Williams from New York Fed, probably the most influential player in the Fed picture. That's where Boycott was, of course. Turbo Tim, before he became Treasury. Yeah. I think that's one website I like, the New York Fed. Okay, inventories, Chicago PMI, and consumer sentiment. Remember, that's a different one than consumer. Yeah, this is 26. No, that's 26. Oh, and then new home sales. Hold on. Where's the new home sales I see on my list? That's pending home sales. I'm sorry, that's new home sales. Where is pending? No, okay. This is pending. Remember, some of these schedules have been moved around, not just for pandemic, but I mean, they've been settled pretty much, but there's some changes because of the last week was a four day week. Trades I want to watch, personal income, but I think the big day for me is going to be early Thursday morning. I may come here a little bit early because you got durable goods, GDP, and initial claims. You can't ask for more fireworks than that. Okay. With that said, moving forward into hi Jack, how are you? Hi Jeff, how are you? Welcome. Let's go on to our charts. PMT quickly. There we go. As I said, I'm trying to change the PMT into this mode where I can give you guys updates. Occasionally we may invite others, but not constantly. Okay, so others by that I mean all subscribers, but not on Twitter or on Facebook. You have to give back a little bit. So anyhow, all right, we pulled back down here. We're down right now. Let me see. Let me take a look here one more time. What's the latest we have here? We're down 27, but we're down about 30. I see the low was 861, so that's a 14 point from the bottom. So we've been down 41 handles negative. Okay, I'm just looking at this, where this is in change versus this is. Okay, same thing here. 364s. That's 36.43 minus. So you add that, so that was 200 points lower. At least maybe 210. All right, which translates to about maybe 1%. Yeah, maybe about 1%. Yeah, at least 1% S&Ps. So again, key thing is really S&P, what the S&P is doing, even though we trade NQ. All right. So we're pulled back. There's a little bit build up there in the advanced decline line, which shows up in McClellan Oscillator. This is Friday. Friday was option expiration. To me, this was a day. This was an intraday reversal. That's what that bar means. Okay. And so I'm prepared to, on a pullback here, to get long on the trade for you guys, for the PMT guys. Okay. It's just a call spread, yeah. And that could come as late as this afternoon. Okay, I'll send a note out to alert everybody on PMT. All right. We pulled back quite a bit on Breadth Trust. There's no question. And there's a little danger there too. But here's what I'm thinking. And there may be some. I mean, listen, you can start creating doubts if you want to by doing too much analysis to create a paralysis in you. Okay, but there could be um, you know, buy the rumor, sell the news issue. But both the Fed, which as defined by Jerome Powell, and also Treasury, which is Yellen, Dr. Yellen, and of course Biden, are going to flood this market with money because they're trying to actually they're going to flood not the market, they're going to flood the populace with cash so they can go in and spend and bring the economy back up. Remember, jobs creates jobs in a Keynesian market model. What that's going to do is going to put a floor here. Even though we may pull back, I'm not saying we cannot drop back. We did that earlier. We can drop back, but there's a floor there. So we will. It could build a base for us. Capital is higher. I'm looking at 4,100 area, at least 4,050 to 4,100 area. I don't think we're done with the top here yet. I think we're going to have some problems later on. And then the key thing we want to talk about is treasuries. We got to watch the treasuries. But look at it. Transportation made a new high. This normally leads the S&P. And we need to get a little bit more on the upper move there on Russell side. Good. And because it pulled back, but it led before. And techs have always led. So they pulled back because of all the pressure on them, including the pullback on Tesla and the hearings and, of course, expiration. So starting a new week, we're going to come in with an open mind. Okay, we're buy and buy. Okay, I understand. Okay. Okay, there's something on the March contract. All right, that's a alert from TradeStation. My apologies. Okay, we're on a buy, longer term, weekly, and a buy here. No big. This is the one we want to watch. These numbers are not very high yet, so we will let that go. We're back into +1/+2 channel. This is crucial. By the way, if you're new to what we're doing, you really need to take a basic video course on what these indicators do. Otherwise, you're gonna be completely lost. You're about 3 months behind if you're just coming here. Okay, just remember that. Give yourself time because there are a lot of nuances here. It's taken me 20 years to get here, and I won't have time to start all of them from scratch. But thank God we have videos. You can go to the videos and take a look. Best place to find these videos is right there. This is some of the basics. Educational webinars. Okay, this is the legacy website, not V3. This is a V2. Go to this and take a look. Okay, then this way, these briefings are more meaningful to you. We're +1/+2 back to the channel. We pulled up a tiny bit positive on Momo. No signal here, but at least it's constructive. No signal, but constructive. Okay, right. Moving forward, vols. The vols pull up. That's not good. That was Friday, but okay, we're back at 24 again. We can't be at all-time high with vols this high, so this has to work itself out. It's trying. Not there yet. It's trying. Okay. Here's the oil. There was a pullback there at 60. We had discussed 60 as the issue. Let's see exactly what the high was. Went to 62, so overshot. Yeah. This is a fracking area. At this price, the fracking companies and their banks, their backers, look okay. Now, of course, I don't know what they do with the freezing environment, but that's a different issue. All right. So 24 there, 27 for VIX, and 32 for Russell. That's pretty high. Yeah. All right. Again, moving forward. SQ, my favorite. Okay. 140, 153 was the close. Let's make sure we refresh this. Yeah, that's the close on Friday. Remember, this updates once a day. So half a stick, quiet. No signal. It's not near the high or low. As near and the measuring against itself, that's all Sigma channels is trying to do, is near a 0 seg, which is that's about a half a sigma. So no signal here either. Trend, not too crazy about it. TD, okay. neutral. We're at 49 or 50 here on SP2, my favorite indicator, well, my oldest one. And it's probably oldest and longest running. Yeah. But this was done 95, 96 era. I completely forgot, but that's my time frame. Obviously, we had to, it was not under Happy. It was under SP2, but I had to incorporate it, found it on an old drive, brought it in, put it into our legal language there that we have, the copyright and all that. And we said 98, which is where the company really started doing their coding on put call ratio and then updated current year. So I don't know exactly what was done. Definitely was done before 98. I'm thinking it was 95, 96. Just in my younger days, yeah. But it's at 50 now, 49.7, yeah. So it's neutral. Canny tool for highs and lows. You can see it. So we need to wait for determination here. It's a little bit iffy. Now, stock RSI, it's very good for our rendezvous points. I like the way the three different modules do. And once they get together, it's not a joke. Okay. Once they get together, it's not a joke. Now, further down, more powerful for upside. Further up, good powerful for coming down. Now back to here. This is where low was put in as a rebound down here. Maybe. No, I'm sorry. Hold on. Low was put in. No. No. Hold on. One second. Let me get this right. This is raw. See, these things are getting, the correlations are broken. That's what the difficulty part is. I'm pretty sure we're running it right. See the spread we're doing. Yeah, March, long March, short June, 3 months later. So that's correct because March is the lead. You can see that from the volume, it's the lead, right? Okay, so yeah, it's okay. I get it. Okay. Here's his explanation. As we go higher in the SPX, I forgot my own methodology. As we go up in SPX, this thing's going to inversely move against it, so in a negative way. And in the traditional years, this is before COVID, this number was around -3. We don't know what that number is now. Nobody knows because it's constantly changing. Throughout the summer, this number could get as low as -7. So jury still is out. We're in a new normal right now, or not so normal, but it's definitely new. Okay, at least we're new. Let's say this one. This chart is in its own paradigm shift. Okay, so it's his own migration. We just have to observe it. We have enough data, then we can make some rules. But I know one thing: when it's hitting up, that means the market is going to be dropping further. And when this gets near zero, usually it's the bottom. So we have to observe it up here. We have a long way to go. So maybe we should pull back on any trade on the upside. All right. Now remember, first hour today also, you have a reverse of the expiration. So you gotta get that out of the way too, and then take a look. Like around 10:30ish, take a look where we are. I'll do a quick review then. All right. If this is the Treasury yield curve by duration. Well, not duration is a keyword. Hold on, let's not use that. By maturity, I should say. Yeah, duration in the bond market is a totally different issue, and it's not broadcast. It has to be computed. It's not broadcasted here. It's based on the portfolio. So it's not broadcast by trade session. Yeah, don't let me not go there. Right, but this is yield to maturities. It's edged up. Remember, it's trading right now. These need to start trading about 5:20 Eastern, if I'm right. I'm sorry, 5:20. No. 8:20. Yeah, I'm right. 8:20 Eastern, 5:20 Pacific. Yeah, 8:20 Eastern. I'm sorry. Yeah. So maybe even sooner. I don't know when the tick was because they've changed everything to get it sooner. But this is definitely today. This little bar. All right. So on Friday we upticked a little bit on the 10-year, 5 and 10, and of course, definitely a good one at 30. This tells me the bond vigilantes are out, and they're expecting a better economy. The vigilantes won't be around if the economy is bad. They run away for the hills. So the fact that they're back, to me, tells me the economy is going to get a little bit better. At least that's their expectations. Confidence in the system, confidence in the branch of government. You can see from the polls. And a lot of it has to do with the vaccine. The more vaccine comes out, this thing is going to edge up. At some point, the market will take a toll. Now, the financial analyst in me says the interest expense for the time being is going to be minuscule. Why? Because rates are so low. Right? The rates are so low. So for the time being, that's not going to be carried necessarily into the bottom line. Okay, let's move forward. Time is of essence, 9:22. Okay, guys. Okay, next chart we want to do is this chart. Let's see where we are on this one. Okay. And we're at 124. Okay, all right. No signal here. A lot of divergence continues. That's what you should expect. This is the scoring number, 200-day. You all know about that. So rising again, little pullback, but just a little bit further, but no signal yet. Okay. All right. Charts overnight. There you go. We're at the 31, getting near the lows. Not yet. That's 11 point more. So it's 42 negative. Okay, that should be over 1%. This is going to be about 1.6, 1.7, I think. I'm just guessing from 364 the low. If it got to go, you may retest that. Remember, we don't go up until we retest the nearest key price. And so far, in absence of a first hour of data, the key price right now is overnight low. So we should be right here around 4 a.m. today. And it looks like, yeah, about the same time here on NQ. All right. On the 30-minute chart, which a lot of professionals look at, you have a cross there on CI. So for the time being, we're pulled up slowly, not in necessarily in price, but in velocity. This is a positive velocity. This is acceleration. If you think of it in those terms, distance, you're back on physics. Okay. Distance, price, acceleration. It's not exactly that. We're not taking derivatives. It's not that simple. Okay. But this is that's how it lines up. All right. Archives are posted, as you know. And then this is the one I'm looking at. And this is the baby I've been working on. So it's not ready for prime time yet. Okay. All right. What else do we have? I have no idea. Again, to close here. For PMT, we'll try to put a trade. I'm revamping it. I think I'm there. We're moving it such that we could have more video for you guys, less charts, but more trades. So switching to that realm, and we're gonna give it a try this week. Okay, a little bit we gotta watch for our timing, but I will update you with a commentary on that to make you aware of the shift. All right. Have a great day. We'll talk to you tomorrow. I'm closing this. Any questions for me? I'll take one question. How's that? Any question for me, Michael? Okay. All right. That's a very good question, Michael. Thank you, sir. Michael Becker has a question. Do you see a possible head and shoulder top, or are you seeing this as a head and shoulder consolidation? Okay. You're a little bit ahead of my pay grade, Michael. Tell me, not sure I know the difference. I know head and shoulders, but I'm not sure if I know the difference. Hold on. Let's take this out for a second. Disable it for a moment. Okay. Okay. Head and shoulder. Oh, I see. This thing coming down and then going back up and then down. I'm going to be very upfront with you. Too far out for me to say to any confidence. Remember, I don't trade 2 trades a year. Some of these market timers, in the market timing sense, I don't trade 2 trades a year. I trade in an ideal condition. We have a trade for you once a week, every other week. Okay, so that I have to be more precise. Now, to be precise, you need to have more confidence. This is an all-time high. You're asking me if I understand you right. Here, let me do this. That's a good question. Don't get me wrong, but I'm just trying to tell you if this could be head and shoulder, let's say top, it would be this down. Okay, let's say this is the shoulder. This is the top. Comes down, goes back and make another top, shoulder, and then drops. Don't know. Here's the issue. What's the catalyst? All of these charts, Michael, make sense when we know what the catalyst is, or at least we see partially the catalyst show up and show his hand. We don't have any of that right now. The only things we see now is actually up, and up for a while. It could be in March. It won't be this month at all. This month is gone. It could be in March, maybe. It could be later on. So to me, we got a little bit to go. That the more you go out, the more imprecise your projection is going to be, right? The error rate is going to expand. The CEP is going to expand. For me, I just don't see. Let me put it in this perspective. Hold on. Let's go here and go to weekly. Yeah. Okay. All right. So when I was pounding the table here was a different issue. It's called Goldman/CDC phone calls. Okay. I knew something was up. Nobody knew what it was, but we knew some craziness is happening. That was a different conviction. When you guys were asking me where the bottom is, I was just taking levels from the past. Okay, and there's a down here, this community. There's a number of 13,000 that's thrown away that I've said that. I said no. Look at my videos. So no 13,000. I did say 14.8. 14.8 was 12 on Dow. That would be 50% retracement from 29.6 where we went short on February. So, but all of these had some logic to it. And of course, this was so powerful, it was so strong. I mean, we dropped 38% in 5 weeks. Never in the history of mankind this has been seen. Okay, that gives you a different blend of your thinking, and also at the bottom. Once you look at this outside bar. If this is not a buy, I don't know what is. You have dropped 38% in 5 weeks, and you have an outside bar this huge. You got to go. Boom. So now, this is a different animal up here. Much, much slower. A lot of issues have been resolved. We've got the vaccine. We've got the PP, both the money, some money has run out, and also the equipment. We have changed the protocols. The doctors are talking to each other. We've come a long way. These were dark days. I won't admit to you how many nights I didn't sleep, but there were some. Because those phone calls were scaring the heck out of me. And I thought, boy, if we don't solve it, we're done. With this much debt and all that, we're done. So that means civil war or craziness on the street. That's civil war. But at least people are going to go and fight to get food for their kids because there's going to be no money. Yeah, I couldn't call it civil war, but it's going to be armed environments out there, and so difficult for me. Shorter time frame, last 2 weeks. Oh, you want me to look at that? Okay, let me. Okay, he's saying shorter time frame. Okay, are you saying is this head and shoulder? I don't see the other side yet. This is the head, so it's hard to say. We could have it, but what's the problem is what happens after that? And what do you mean by consolidation versus top? I mean, in terms of continuing, we could have it. Then I would vote for the flatter. I would say head and shoulder consolidation. Yeah, I don't see a top here yet. No, I see what you're saying. Yeah, I see more of a consolidation. That means yes, we'll come down, we go up a little bit. That's not, and that may be a top for a year for time being. We're consolidating for a while. Why? The investment thesis has not changed. Okay, low inflation, lots of money, and you have adults in the room. You can see what's happening with everything else because of data. Always follow the data. Forget what your gut feeling is. Don't do that. Go with the data. All right, let me close this. We got to hustle and get out there.